Hi, gentlemen. Good morning. Thanks so much for being with us. Feroze, let me begin by asking you, this data that my colleague Sharad was pointing out, that the demat addition has fallen off. Is that something that you also have been hearing about, or there is a bit of a softening and moderation when it comes to the interest in the equity markets?
Also, I think, of course, like your colleague rightly pointed out, that the number of demat accounts have come down and they're at about 7-8 month low in terms of the new ones being opened. I don't think it perturbs me too much if this, in conjunction with another piece of data where SIP numbers coming down, then it tells you the basic barometer of what the sentiment towards the capital market is. In fact, हम चाहते क्या हैं? As an industry, we want lesser trading, more long-term investing. India is a long way to go in terms of a lot of people coming into the bandwagon rather than graduating from disciplined investing to stock investing to derivative investing. Most of the India is starting in the opposite direction, doing the 10th standard first and then coming to the first standard. I think people are burning their fingers and coming to the reality, especially when markets tide turns, then comes the respect for risk. Risk mitigation is always respected during bad times, and good times risk is not on the surface, it's under the surface. So that's point one. Point two, what really heartens me is I'd actually given a number of March 25,000 5 years back. And we've reached 25,000 for the first time, about 4 months with a buffer. At that time when I said that, the SIP number was 7,000-8,000 and people thought I was crazy when I was saying that, but I statistically extrapolated using regression that we'll get to 25,000. Who better than Sanjay sir, who almost controls a large portion of the SIP to commit? It'll be incorrect for me to take his thunder.
You know, Feroze, I just wanted to come in on that because just this point of maintaining discipline at the times when there's volatility in the market, which is what we have seen. Now we're hearing articles about thematic funds losing charm in the month of November, and they were the darlings for quite a long time. So what is it that you think will change the game, given the fact that we're a population of, 1.3 billion, and then the number of total mutual fund accounts is fairly low in comparison? What do you think will change that?
See, I think what will change that is a lot of things, right? If you're going to move an elephant like India, from a capital market standpoint, when you have only 6.7% of the financial savings, only financial savings case 6.7% is in equity, and we are a high inflationary economy, and in turn the real returns are low. And with this kind of India's asset allocation, I don't think India for the next 20 years can beat inflation. The rate at which we are moving. We were at 4.1% 10 years back, and large portion of this 6.7 has also come from mark to market. So I think we have a long way to go. And what can fix this? I think there are about 6-7 elements which to my mind can fix it, and each of us as stakeholders have a role to play to make sure that the objective of doing this is not because my company wants profits or I want more money to manage. How can India create real return when we have crores and crores of people who are struggling to even beat a inflation number? Now, let me at least tell you one thing which will change. That thing is basically the investor education kitty, which AMFI, I think all AMCs have done a brilliant job in trying to create credibility. I think that's moved the needle, and especially when you're going to work on fundamentals, it does not show up immediately. That's why you see from 2013 investor education budget started on 1st January 2013 is when that happened. The inflection point was identified by us about 4-5 years back, and that's why you see the SIP number started this year with 17,000, and you see an 8,000 crore addition in the SIP number, which was nothing but the first 30 years of privatization of this industry. So I personally think that we are at that inflection point. I think credibility was low. Now credibility is high, and people have actually burned their fingers in several defaults, even in cooperative banks and chit funds. I think that's where structured economy of investing and capital markets can come to the rescue.
Financialization of savings, clearly the big theme, and we're, I think, only barely scratching the surface at the moment. There's a long runway to go. But Feroze, you got it right with 25,000 odd crores with the number crunching. What's the next target you are putting on the SIP figures now?
See, I've not run that regression model, and regression is like astrology, statistical astrology we call it. I personally think I wouldn't be surprised that the growth number of 8,000 crores, which happened in 8 months, could happen in 5 months, in the next 5-7 months, is what I personally believe. So we can get to 30,000 far more quicker than the 17 to 25,000 number. So to to put a number out, 2027 March, 50,000 is what I would personally believe. I would want to ratify this in the next time when I'm there on your channel, maybe.
Sure. So 25 to 30 perhaps we'll have at a quicker pace, maybe not putting a number to it, but definitely quicker than what we saw.
Feroze, we have seen 4 straight, strong flows for consecutive months. What's the outlook? What are you telling investors to do here?
See, I think one thing which is very, very bright for this financial year and not for the last 3-4 financial years is net of SIP numbers. The net flow from HNI has been positive, which was negative for 3 consecutive years. FY21, when HNI should have ideally bought, it should have been a screaming buy post-COVID. HNI removed 1,25,000 crores, net of SIP numbers, which I'm speaking about. So point is, this month, if you look at November, we are speaking of almost about 35-40,000 crores. And if you remove the SIP purchases of 25,000, lump sum purchases, net purchases have been 10-12,000 crores, which I think is a very bright spot. Now, you also mentioned about, Avan, you mentioned about sectorial indices. I think that's where the catch is. Like 3 NFOs came, collected 3,000 crores. That's what puts the sector space on top in terms of net flow. I think most AMCs are retorting to sectors because they've already exhausted their bouquet in the rest of the category. And if you look at, there are 36 sectorial indices on NSE. So it's become unlimited supply of approvals, which is what AMC's, SEBI was trying to curtail in 2018. If you look at NSE 500 and see the number of sectors which are there in NSE 500, and AMC now has another 100 approvals possible. So I think we should try and be a little more cautious as an industry to guide people into NFOs of sectorial, which I think, especially when the tide turns, it becomes difficult for a new entrant to absorb that kind of volatility.
Same question to you. In the current scenario, what do you think it's advisable for investors to look at to invest in?
See, Avan, if I go bottom up, what I would say is the broader market rally is not over. Quite a few people called out the broader market rally is over about a year back. I personally think the broader market rally is not over. That's because 168 stocks out of 250 stocks, the FIIs, in spite of being net negative on India, have been adding shares. There are 38 shares in NSE 250, small cap 250, where FIIs have more than doubled the number of quantity of shares. And these 168 shares, which is more than 2/3 or a little over 2/3, where FIIs have added in spite of being such large outflows. So that's point one. So small cap and the mid cap is not over. Especially from a domestic side also, you see the barometer of sentiment is small cap inflows. Sanjay sir also said that their inflows continue in the mid cap and the small cap space. So with that theme in place, I would say multi-cap is a good start point for an investor. And I think small and mid cap, 20-30% of your SIPs going there is no harm at all. And I don't see such large bubbles because there is some degree of free float lacking in that space. So I think valuations will remain elevated, and that's what we have to live with unless good paper comes into the market and creates supply of great companies after they get listed.